businesses in every corner of the UK. So for the fifth webinar in this series, I'm really delighted to welcome Lucy Cohen to join us this morning. Welcome, Lucy.
Hi, Dylan. Thanks for having me on.
Brilliant. I just want to tell people a little bit about you, because obviously we've known each other for years.
Yes.
Everybody else doesn't know. So Lucy's the co-founder of Mazuma, which is revolutionizing accountancy for small and micro businesses. And Lucy's been at the forefront of striving to try and be ahead of the curve in an industry that's been historically resistant to change. The history of Mazuma, it was really created drawing on Lucy's childhood experiences of seeing the stress and anxiety that tax can cause for people. She grew up in a family of self-employed creatives, and she noticed that they were fantastic at what they did, but not so great for the tax and account side of the businesses, something I think a lot of people will empathize and sympathize with. So she spotted a gap in the market for low-cost subscription-based accounting services. Mazuma was born, and she's had over 16 years of Mazuma, and now she's widely recognized as an industry expert and regularly called upon to contribute to various discussions on accountancy and wider issues. In October last year, Lucy was honored with the Outstanding Contribution Award for the Accountancy Excellence Awards. Her second book, Forget the First Million, won the Best Short Business Book of the Year in 2022 at the Business Book Awards. And in September, a couple of months ago, Lucy was presented with a Past President's Award by the AAT, her trade body, an award that recognizing the outstanding contribution by one member of the accounting body. And more importantly, outside the accounting profession, Lucy's been very successful in a very, very important campaign where she petitioned for better pain relief to be offered for female medical procedures, appearing on BBC Breakfast and Agam and Chetty and being featured in Vogue, Glamour, and I'm sure she loves this one, the Daily Mail.
Yeah, so, it's the favourite one, that.
So welcome, Lucy.
Thank you.
I'm sure we're going to talk about a lot of things this morning, but let's start about, I love your story because I think a lot of people would see this about, you know, how good everybody who starts a business started because they're really good at what they do.
Yeah.
And then somebody starts saying, well, do I have to pay VAT? In fact, what is VAT?
Yeah.
So, don't tell us about your entrepreneurial journey, you know, how this came about. You know, I gave you a short summary, but tell us how you got into all of this.
Well, it really did come from kind of watching my family. So like you mentioned there, my family are not financial people. They're creatives. A lot of people, obviously, with the book writing and various other projects I've done, lots of people would say I'm probably a frustrated creative as well. But they're you know, they're musicians, they're dancers, they're actors, they're artists, and they are amazing at what they do. They're incredibly talented people. But what goes along with that usually is being self-employed. And I remember as a child, always seeing my dad go off to the accountant's office once a year in January, mid-January, and with his kind of one of those like accordion folders full of receipts and bits and pieces, and off he'd go with that, and he'd come back worried and stressed and would talk about he doesn't know what his tax bill's going to be and he doesn't know what the accountant's going to charge him. And that went on year after year after year. And when I qualified as accountant, I started thinking about this and thinking how, for someone who's qualified to do it, how easy it is to put that accessible information together. And at the time, 16 years ago, the world was a very different place. Cloud software wasn't a thing. It was all kind of, wasn't quite floppy disk, but CD-ROM, and you had to have an accountant help you set all this stuff up. So for micro businesses or self-employed people, there wasn't accessibility to regular, correct financial information. You could look at your bank account, but that's not going to estimate your tax bill or tell you what a payment on account might be, or let you know if you're close to the VAT threshold and all that stuff that really you want someone qualified to deal with. So I just came up with this idea of, well, what if people could post me their stuff once a month. I'll do all the bookkeeping, give them some management accounts, give them some added value, let them know what their tax bill is likely to be if they carry on like this, all that stuff. And it developed into this subscription service. So it really did start off very scrappy from my spare bedroom with some purple envelopes, because they were the cheapest ones I could buy in Staples, was a pack of purple ones. I was like, they've got to stand out from my normal post and I need them to be a colour, so purple it was. And that's really how it started, and it's grown from there.
Yeah, I'm going to admit I'm one of Lucy's customers, and I've been with Mazuma for a very long time.
A while, yeah.
Those purple envelopes very well. It's all done online now,
Yeah.
which I'm even worse at doing than I was when I was trying to fill the purple envelopes. I'm your typical bad customer, I can imagine. But it is incredible. I mean, you know, what you have here is a very traditional industry,
Yeah.
and you know, it is ripe for disruption. Why do you think you were one of the first to actually look at this and say, hold on, you know, this is it because it was very much a traditional industry that wouldn't change and had its set norms, or was it expecting somebody like you to come and kick it up the backside?
I think a variety of reasons, really. I mean, until relatively recently, we're talking kind of maybe 20, 25 years ago, accountants weren't legally allowed to advertise their services. They could have a shop front. They were allowed kind of like one entry in a business directory, but they weren't allowed to actually go out to the world with marketing or advertising or value propositions. So you know, we're an industry that has relied heavily on word of mouth referrals, having a geographic patch, serving only that patch, and kind of not having ambitions beyond that. And as the world has changed, I mean, I'm saying this, the first business advisor I ever saw told me that Mazuma was a terrible idea, said it would never work, it was an awful idea, I shouldn't do it. And obviously they were wrong. But you know, that was the thing. Then it's like, you can't rebrand accountancy, you can't make it quirky, you can't make it accessible. It is how it is for a reason. And I think you look at the kind of the old guard in the profession, there's still an element of that sits within it. But these industries, these old school industries, are ripe for disruption. Look, we've seen it happen with the insurance industry. And that's a really good example where it used to be kind of broker led or direct to company. And we've seen comparison sites coming in, and that's normal now. Most people think nothing of going to a comparison site to find their insurance and just doing it all online. 20 years ago, that was unheard of. So we've seen development in other kind of similar areas. And for me, it was all about the end customer journey. You know, I see I love you. Well, you know how much I love small businesses. I love micro business. I love self-employed people. They're scrappy, they're resilient, they're inventive. They're always up against it. They're plate spinners. I love all that. And I just saw them. I just thought it was really unfair that they had help in all these other areas, but you know, no one to help them with the numbers bit of it. And you shouldn't have to be good at that stuff, because that's not what you qualified in. It's not your trained to do. If you're out all day building houses, then you're creating beautiful homes for people and shelter, and you know, Maslow's hierarchy of needs, shelter's right up there. You know, I don't expect you to be able to do your bookkeeping. That's ridiculous. Someone else should do that at a affordable entry point for people. So yeah. And then when we started this word subscription, again, I hate this idea that you have this unknown once a year thing to pay that is a shock or a surprise, doesn't leave you with time to shop around it. That's a very uncommercial way of doing things. It was twofold, really. I was young, starting a business. I wanted to know how much money I was getting in every month. So I was like, well, if I can get people to pay me monthly, that makes sense for me. I know where I am, but also they know where they are. It's a really easy, you get this in return for this. And the word subscription wasn't used back then. We called it fixed monthly fees because we weren't used to Netflix or Spotify or, you know, Apple Music, all those things. And now subscription makes much more sense than fixed monthly fee. So we've kind of changed that wording as the world's evolved. But yeah, it's for me, it was ripe for disruption. I didn't go into it thinking I'm going to disrupt this industry and this is my kind of raison d'etre. I just went into it going, I think I can build something that works for me as the business owner, but also it has got kind of appeal broadly in the market. And so far, so good.
And of course, as you say, been 16 years at Mazuma. Tell us about some of the, I'll come on to success factors in a minute, but I'm interested in the challenges, because as you say, this is a very new type of business in the accountancy industry. And therefore, you know, trying to get traction in something like this, particularly when people are used to doing things a different way. So what were the challenges at the beginning and you face since?
Number one question that we get asked was, well, why isn't anyone, if this is so great, why isn't anyone else doing it? And I still don't really have an answer for that. I'm like, I don't know. It seems so obvious. And I think that's a really hard objection to overcome, because how do you answer that? What do you say? Everyone else is wrong. We've thought of something no one else in the world has thought of, which seems, again, still ridiculous. That's the case. So that was really hard to overcome. Also, we didn't really have any direct competitors. So we're trying to compare what we do in a completely new go faster strike way to the incumbent. It's like trying to compare a horse to a car. You know, what it gets you somewhere, but there's very different ways of doing it.
Yeah.
And we didn't have any direct competitors to really rub up against. We didn't even have a kind of comparable subscription-based service. So now we're kind of like, oh, it's a bit like Netflix for accountants. We're like, yeah, that, you know, that kind of makes sense. We couldn't even do that. So it was really hard. That education piece took a long time, and we used, again, we didn't have any money, so we used PR and we used kind of networking to kind of get that message out, but it took a long time to gain traction. And you typically find that people would either get it immediately and go, this is great, I don't know why no one's thought of this before, or they'd be very suspicious of it. We also faced, less so now, and I think actually the accountancy profession's a very different landscape to what it was when we started, but we also faced not backlash, that's a bit dramatic, but we definitely face criticism from within the industry, again because we've got this kind of slow incumbent set of people who've been in business a very long time, working in a very certain way, being very critical of this kind of new wave of doing stuff. And it's a classic, isn't it? You know, traditional London taxi drivers hate Uber, and you're going to get that kind of conflict, I suppose. Now it's very different, actually, and we work collaboratively with other firms because they've got clients that are not a fit for them, and there's much more cooperation within the industry. But that has taken 16 years to get to. It's taken a really long time to get people comfortable with the idea of kind of working together rather than just kind of, well, we're a competitor. And I think that abundance mindset it's taken a long time to kind of get into the accountancy sector. But yeah, those were definitely some challenges. And then we faced other ones. You know, we were young, we were female in a very male dominated industry. Those are definitely challenges that you face. And then the usual stuff on top, you know, alongside that, the usual stuff you've got as a business, your cash flow, your getting new customers, your sales pipeline, your growth strategy. The moment where you go, it's great, I'm just going to employ people and things will be much easier. And then you realize that you just present yourself with a whole different set of problems, all that stuff as well with growing a business. So yeah, definitely a challenge, definitely not plain sailing, but I'm always very grateful for the challenges we've had because it's definitely made us the business we are today.
I remember you started, as you mentioned, it was the purple envelope and people putting their, like I used to do, all
the receipts and rubbish in there,
everything, and let you guys sort it out.
Exactly, yeah.
But then you decided a few years ago to become essentially a tech online business, which is a big step to make. And I know it seems the natural thing to do, but again, you know, what triggered you to do that, and more importantly, what were the real challenges you faced from going from, you know, I wasn't saying it was traditional, but you were a paper-based accountancy business, something very different.
Yeah, so it was. So interestingly, not that we were resistant to using technology, but it had to be right for our marketplace. And that use of technology had to be something that they adopted in other areas of their life. Otherwise, it would never stick. We can't push a client base or a set of people to use stuff that they're not comfortable using. That's not what we've been about. And in fact, you can still use our paper-based service. If you're still somebody, my sister is an artist, there's no way on earth I'm getting her to upload anything. She's a very physical person, and she's like, no, I just want to put it in an envelope and go to the post box. That's fine for me. And you can still do that. But we take on the digitization for you. So we take on that burden for clients. When iPhone launched, and when apps started becoming prevalent, then businesses started using apps to kind of run. Apps weren't just the thing you played Angry Birds on or pretended you drank a pint from. They actually turned into something useful. We constantly got approached by developers saying, you should have an app for your business. And for years, we said, what would it do? What is the point of it? Oh, well, give people tax calculations. They're not going to use that. They're not our base. Or you show them a calendar. It's not useful. So it took us a long time to figure out how it was going to be used. And it was to do with the way that actually our customers behave. So we got to a kind of tipping point where people started saying, oh, so have I got to like print off my stuff to send to you? Because I'm getting all my stuff electronically now. So there's a kind of general shift. So we had a first iteration of what is now Mazap, which is more kind of file sharing portal online. We had a first iteration of that, which worked for years. And then about 2 years ago, just over 2 years ago, we just started looking at efficiency in the business and looking at how we could deliver more with what we do. So again, looking at what small businesses need. They need a way to get paid quickly. It's clunky sending someone an invoice, getting them to set it up in their bank account, do a backs payment. Can we give them an account to account payment system? Yes, we can. We can build it into an invoice. Can we give them better visibility? Can we sync it up with their open banking so they haven't got to provide a bank statement? We can just pull the data. So we started thinking about what would make the service better for clients. And that's when we started the tech roadmap. Within that, then we were also finding that the other cloud softwares that exist out there, so your QuickBooks, your Xeros, the free agents, that kind of thing, they're great, really powerful pieces of kit, but for our client base, too big. Just too big. They were using 1% a year. If you think about how we all use Microsoft Excel, we use a tiny fraction of that. That's what they're doing in Xero, but it's costing them a lot of money. So we started building a general ledger, which for us does all the fun things. Well, I think they're fun, data extraction, AI, all that kind of stuff. So we started developing that. We've been very careful to still use the same language. So from a client's point of view, you're still just putting stuff in a purple envelope. We're not asking you to do more, but what we're doing with that is we can be creative and technical in the ways that we use that data to provide better service. So that's the journey we went on. From a commercial perspective, it I think enhances our offering to people, and from an efficiency perspective, it lets our staff do more with their time. They've got better quality time to spend on kind of more important things rather than kind of just bashing through data or getting bogged down in it. It means that we've got kind of tools to make their lives easier. So it was about that, really. But yeah, I mean, we can work with people. We've got people who receive all their payments through it and sync it up with their open banking and automate this, that, and the other in it. And then we've still got people who send paperwork in a purple envelope, and those two sets of people will still get the exact same service from us. So we're letting them access that in both ways, which for me, that accessibility piece was really, really important because of my background with my family.
Obviously, a lot of your clients are micro and startups.
Yeah.
I'm just intrigued to know, do clients stay with you even though as they grow, or do they as they get to a certain size, do they say, oh, we'll go to another accountancy company now, or do you manage to retain them because of what you offer?
Yeah, we do retain. We've got clients who have literally been with us for 16 years. We've got clients who've been with us a very, very long time. On average, clients stay with us around the 5-year mark.
Okay.
And typically it's because we work in the micro business space. So there is churn of businesses generally within that space. Businesses start up, they close down. So that's usually the number one churn reason is business cessation, which always makes me really sad. But they do come back when they start a new business. You tend to find entrepreneurs, you can't keep them down. Well, if they've done it once, they'll probably do it again. So we do see that happen, but obviously that reflects our churn figure. As people grow, so when we deal with scale-ups or people who start, we have a very honest conversation with them. We never pretend to be something we're not. And if people are outgrowing the service and they need more advisory services, or they need almost to a point where they're needing to be running a payroll in-house, or they've got to be producing forecasts or answering to a board and they need more from it, we'll work with, like I said, that corporation, we'll work with other firms, say, look, you're outgrowing what we do now, and that's fantastic, brilliant. I want to introduce you to somebody who we think we can take over from here, because actually you need that little bit more. And sometimes that's a hard conversation to have, because obviously those fees increase when you go to that next tier, but it's really important because they need that extra support. So yeah, we are honest with the clients about it. And sometimes you do get people kind of wanting to have a square peg fit a round hole in terms of they like the fee and the accessibility, but actually we're not going to be able to provide it. What we're also quite conscious of is we're very, very targeted in our marketing, and we're very, because you've got people who are lifelong lifestyle businesses, and I hate that the word lifestyle business has a bit of a taboo around it, or it's a little bit kind of people like, oh, it's a lifestyle business. It's brilliant. I love a lifestyle business. They're fantastic. They're serving you. They're giving you what you want. They're giving you that work-life balance. They're giving you an income. Brilliant.
Exactly.
Those ones stay with us indefinitely, because we're what they need, and it's compliance led, and we can get all that stuff done for them. So yeah, but I kind of love it. It's kind of like it's bittersweet when we see people who start with us in a little scrappy startup and then they fly and we kind of have to see them go. It's always bittersweet, but it's nice to know that you help them on their way to get to that place. That's always really, really nice.
And have you thought about for the the next stage in Mazuma's evolution of us saying, well, maybe we should move into the space that some of these, shall we say, medium-sized accountancy, the ones you hand over to, or are you going to stick to the knitting and just continue to build where you are now? Because that's always a difficult decision to make, isn't it?
It is, and it's something that we revisit. And anytime we have new people on the board, or we have kind of other people coming in other areas of business, it looks like such an obvious thing. Well, we could just have this section open and charge higher fees and XYZ. But I am a big believer in doing one thing well, and that's kind of what we do. Is we do the one thing well, and I don't want to dilute that, and I don't want to take away from that. And it also allows us, like I said, that collaboration with other firms. It lets us do that. I talk a lot about having your niche and having the thing that you do and focusing on that. The market is big enough for all of those, and yeah, we're experts in that micro business space, and for the foreseeable, that's where we're staying.
In terms of finance, if you look at all the statistics to see why companies fail in the first 2 to 3 years, it's always to do with finance.
Yeah.
But it's not the actual money, but it's actually the management of that money.
Yeah.
And it's the lack of financial management skills.
Yeah.
So from your experience, how has Mazuma helped businesses with this? Because I think it's really critical to have that you don't try and do it all yourself, as you say, if you're not good at it, and you hand it over to someone who knows what they're doing. But have you seen, companies that have come to you saying, "Oh my God, here's the sack, the purple sack full of receipts,
help,
envelope, sort it out." And when they do this, oh right, now I can focus on doing the business.
Yeah, 100%. The biggies always, there's a discrepancy between cash and profit or loss. Always, you can have loads of cash in the bank and be making a loss, and you can have a profit and have zero cash in the bank. Look, growth is expensive, and if you're growing and you're making profit, it's likely that you're probably burning through some cash to do it, and that's fine. You've just got to know you're doing it. So with our tax system as well, regardless of the entity, especially if you've gone from being in a job, so if you've gone from being PAYE, say, your tax is something you never think about really. It's taken out of your pay slip. You don't have to do any specific reporting to any external bodies. Maybe every now and again your PAYE code gets messed up and you speak to your payroll department and they sort it out and it gets adjusted to your next pay slip, and that's the extent of it. That's all you've got to worry about. Suddenly you're thrown into this area where you start a company, and for ages you don't have to pay any tax. It's like over a year you don't have to pay any sort of tax really, and suddenly then you can be hit with in one go your personal tax bill, your company tax bill. Maybe you were late registering for VAT and you've got to figure out how you're going to deal with that. Do you have to go back and charge people extra, or do you have to absorb it? You can suddenly, it's usually about 15 months when the panic sets in. So you've off your sailing, it's brilliant, and let's face it, a year's not a long time, is it? A lot happens a year, especially when you started a business. That first year, steep learning curve, doing all the things, wearing all the hats. You finance, as long as you've got some money in the bank account, you can take a bit out for yourself. You're probably not worrying about it too much, or it's there and people keep telling you, oh, you should get an accountant, or you should sort out your finances, and it's not maybe like that pressing. And then suddenly you start getting letters from Companies House or HMRC, and they're quite scarily worded, and you start thinking, oh Christ, what's going on? And then you get an accountant, and the accountant delivers you the bad news. I'm really sorry, you're going to have this tax bill on this date and this VAT thing on this date, and you start going, I've just started paying you a bunch of money and now you're telling me I've got to pay more money. This feels terrible. That's a really normal pattern. Like, that happens all the time. So if you are in that space at the moment, totally normal, everyone does it. The main thing is having a plan. Even if you've got bills that you think you can't afford with HMRC, if you've got an accountant acting as your agent, we can negotiate with them on how to pay that. We can tell you what you've got to pay way ahead of when you've got to pay it. We can recommend how much money you're putting into savings every month to cover potential tax bills. We can talk you through the weird idiosyncrasies of, well, I know you've not paid any tax for 18 months, but suddenly you've got to pay 18 months in one go. Oh, and by the way, in 6 months, you've got to pay your tax in advance for next year, which is a a weird quirk of the system, but that's how it goes. And you've got entrepreneurs sat there going, but why am I paying in advance and everyone else pays in arrears? And we're like, I don't know, just the way it is. You've got someone advocating for you. And once the relief is palpable, so I listen into some of the calls we take from new business when people join us, and there's a moment in those calls when you can tell they're on the phone and they're stressed and they're highly anxious and they're so worried. Even just, it's a bit like ripping the band-aid off. Or the one I always say is like, after Christmas when you've eaten a little too much and you kind of you steal yourself and you step on the scales, you go, well, at least I know how bad the damage is. Like that's it. Or you put the trousers on, you go, they're a bit tight. At least I know I'm not kidding myself anymore. There's a big power in just having that visibility, because there's nothing we've not seen before, and it's never as bad as you think it is. And you've got a plan then, and you can hear people on the phone literally go, oh, I'm so glad that I've finally got someone doing this. And the best bit is they haven't got to keep worrying about it. They can just let someone else handle it, and we'll tell them when to do stuff. So you can't overestimate how important that is for mental health as well, because when you are running a business, you need that bandwidth to do what you're great at, not to be up at 4 a.m. worrying about some horribly worded letter that came in a brown envelope that day.
And I think that is one of the challenges, isn't it? Is that every founder feels that when they start their business, they're the only person who was actually facing these problems.
Yeah.
Whereas, millions of people have faced them before, millions of people have faced them now, and millions of people face them in the future.
Yeah.
And so I think it's what you've just said is really important in terms of the comfort they get that they're not the only person in the situation.
Yeah.
They're not the only person who's got the problem, and it can be solved. Yeah,
there is nothing that can't be solved. There are very few accounts or tax-based emergencies. There is always a solution to the problem, and these problems are ubiquitous, and it doesn't matter what kind of company you talk to. They've all got the same problems. It's always sales pipeline, cash flow, staffing. Those are the three we hear all the time, regardless of the size of the business. And I talk to other companies, and there are problems that we face as well as a growing business. I talk to companies much bigger than mine, and I'm like, oh, we've had this nightmare this week, or this thing happened. And they're like, oh yeah, we did too. And I put these companies on a pedestal and go, they've got it all figured out. It's amazing. And you speak to their CEOs like, oh yeah, we've had a nightmare with this raise or something. And they're always there. You're always facing them, so they'll never go away, but you put in the right support network around you to deal with it. I'm a big fan of the kind of who not how mindset, which is if you've got a problem as a owner founder, especially if you've come from kind of starting yourself and bootstrapping, you feel like you're the only person who can solve that problem, and you hold all that burden. Actually, there's someone out there who knows how to do it already. Just go and find them and get them to do it, and save your bandwidth for your unique abilities.
And building on what you've said, it's interesting in the last few months, there's been some real casualties of the recession we're already
yeah.
And again, you would have thought, these are amazing companies, they're very successful, they've been here for a long time, and then you hear, oh, they ran out of cash, or they've had financial difficulties.
And
you're thinking, these are multi-million-pound companies, and yet they've gone through their problems. And if you're a founder of a small startup, then it's not surprising you'll find similar problems.
Yeah, absolutely. The stakes are different, and the number of zeros at the end of that problem are bigger, maybe, but it's the same problem. I remember when we very first started, wondering how I was going to pay £120 for a software license we really needed, and now we've got a different thing. I'm like, well, how am I going to pay this? And how are we going to hire developers, because they're expensive, especially at the moment. And it's the same problem. How are we going to do it? And your cash flow, specifically, if you're a big business with big income, it's likely you've also got big expenses to go with that. So that differential between the two, that runway can disappear in just as much or just as short a time as someone who's got a very small business. It's the same problem. It's just, we're all facing the same problems. So I don't know whether that's comforting or not, but hopefully it is.
But I was talking, we've been doing some analysis of fast growth companies over the last few years. And, you talk about things like team and vision and all these other great things. But one of the things that always comes through is that we used to call it, shows my age, it used to be called the bus ticket, right? The bus ticket finances. So on a bus ticket, the old bus ticket used to have, you'd be able to write 3 or 4 things
Yeah.
that you should know about your business at the
Yeah.
end of the day, your KPIs,
Yeah.
be it your sales, your profits, etc. Do you find businesses adopting that increasingly? That they, or shall we say, should founders actually start thinking about, you know, if you don't know what your business is making at the end of the day, it's time you should.
Yeah, actually, I love that bus ticket thing. I'm going to nick that. I could see an article about that, or some content around that. I love that. Yeah, you should.
They're taking out the bus tickets, unfortunately.
They're all digital. You can't do much on it anymore. Bring them back. No, I think that, yeah, I mean, the obvious things you should kind of understand about your business is how much profit you're making. If you're an owner managed, or you're a founder and you're needing to take money out of the company for yourself, that's also something that's really important, especially in the smaller business space, is you started a business to serve yourself as well. You can't be the last person to get paid, never get paid, and be struggling whilst you've got staff who are on a good salary. You have to make sure it works for you. You can't work for free. Otherwise, I'm going to argue that business doesn't work. So you need to make sure that's happening. Understand how you're going to take money out of the company for yourself, what that looks like. And obviously your KPIs, you know, your net profit, your gross profit, your turnover. But other things I think are really important, depending on your sort of business. So looking at what drives revenue in your business, what drives profitability. So if you sell a subscription, so us, for example, we know our average cost of a subscription is X. We expect to onboard X per month. Our churn is whatever percent. So we'll know what we're expecting to come in, what we're expecting to churn, and then we know that business will be with us about 5 years. So we know the lifetime value of that client on average. So we can plan, well, by this point we'll have this number of clients, we need this amount of staff, those sorts of things. If you're having to sell individual products over and over and over, you need a strategy to understand, well, at this point there, Christmas, we're going to sell this many, at Valentine's Day, we sell this many. Understand that part of your business. If you're an ice cream seller, you're probably not selling as many in December as you are in August. So let's adjust for that. And understanding those trends in your business is crucial, because it allows you to literally make hay when the sun shines, or fix a roof when it's sunny, whatever analogy you want to throw in there. When you don't understand those things, you can very much fall into this kind of boom and bust mentality in your own business. So 1 month it's like, woohoo, I've got loads of money, and then you spend it all, and then 3 months later you haven't got any reserves, and you're like, oh, what happened? Understand that data is crucial. So just collecting that data and starting to watch it, and then figure out, if I had no other information, what are those 3 things that, if I knew those things every day, I'd have a good indication of where we're at. And it might not even be net profits. That might not be the one that does it for you. It might be pipeline. It might be efficiency rating, how quickly we're turning things over. It might be order to distribution, which is the thing that drives it. You have to figure it out for your business, and then monitor them, keep them, OKRs, KPIs, whatever you want to use, track them, and work for incremental improvements in them.
And I know you don't do this in the way other accountants do with business plans, for example.
Yeah.
But how important is it that, you know, that a business has an idea of where it's going, particularly financially?
I mean, you've got to have an inkling. So I'm not a let's write a whole gigantic business plan. And you know, I remember writing one when I first started the business. I'll take it to bank very proudly. It was all bound in a folder, and no one read the bloody thing, including myself. And then it sat in a drawer, and it was completely useless. So I actually hate reporting for the sake of reporting. It's got to be meaningful. It's got to do something. I like a slide deck. 6 or 7 slides explain what your vision is, where you're going, how you're going to get there, and what the delta is between where you want to be and where you are now, and what bridges those gaps. Really useful. Financially, tracking those drivers, like we just said, you know, you're at, I don't know, you're brand new, you're at 10,000 turnover this year because it's your first year in, and you want to get to 50,000 turnover. How? What actions are you going to proactively and intentionally take to do that? It's not going to happen by accident. You're not just going to randomly get from one to the other. You might fluke it a couple of times, but you'll be taking some intentional actions, and approach it with intent and have that plan, and then hold yourself accountable to it. Or even better, get someone else to hold you accountable, so they can, as you say, kick you up the butt when you're not hitting your goals, and they can question you on it. That's really valuable too. But yeah, it doesn't have to be fancy, it doesn't have to be complicated, it just has to be an actionable plan.
And going back to what you were saying before about this whole idea that I don't think people appreciate it, because we have this impression of entrepreneurs as these amazing heroes who conquer the world. But these mental health issues that many entrepreneurs have at the beginning, you know, many of them won't have actually experienced that sort of stress level in what they were doing previously. But everything is essentially on you initially. And it's we were discussing this with Sophie Milliken about this idea of founder's disease, you know, and letting go and all this sort of stuff. And it's really difficult in terms of founders doing this. And I suppose what you're doing is giving them that way of letting go of their finances, so you basically take control of that.
You again, it's the who not how thing. I know sometimes that when you start a business, you're very much kind of watching the pennies, and it's really hard to think, I'm going to sign up to this subscription for whatever it's going to be, if you can't see a direct ROI on it in that moment. So unless this thing's going to make me money or give me exposure, whatever it is, you know, let's face it, it's not sexy signing up for an accountant, is it? Like, no one's going, woohoo, I've got a new accountant. They're like, woohoo, I've got a new website, or yay, new branding. They're not like, yes, accountants. And I get it, you know, we're never going to be cool, but yeah, it is one of those things that is going to free you from a lot of that burden, especially when you get into the realm of paying people and kind of people questioning their pay or their tax codes and all that kind of stuff. That can get very stressful very quickly. So yeah, having someone to handle that for you, hugely valuable. And as a founder, it's very hard to let go of stuff. Especially, like we said, you have kind of bootstrapped your way there. You're wearing all the hats. Your marketing, your sales, your HR, your payroll, you're all of it. And you put everyone else first, and then you're holding all this stuff. And there's only so much you can take. Getting rid of some of it is going to hugely help you. And you'll actually make more progress from doing that, because you're not worrying about things that aren't your natural forte. So my business partner Sophie and I split what we do. I sit much more on the kind of commercial brand sales side of things. She sits more on the kind of tech roadmap, finance things. No one's going to sit there and ask me to go and do our projections for 5 years, because I'll get bored in 10 minutes and I'm not going to do it. I can input, I can idea, I can do the sales bit, but all that granular detail about what our insurance is going to go up by in 2 years' time, that's Sophie's thing, and she does that. She's my person to do that. Likewise, if I asked her to write a marketing plan, it wouldn't happen. So we've got the right people doing the right things. When you're a small business, sometimes you've got to go externally to do that. And yeah, I encourage everybody to do that. Whatever it is, it doesn't have to be accounts, but whatever it is, it's going to free you from it. My current one is I'm trying to quit emails. So I want to check out of emails. So trying to find a way to do that and get someone to help me do that.
Took me 2 hours just to clear last week's emails. It's ridiculous.
It's depressing, isn't it? Yeah, but that's not a good use of your time. You should have someone doing that for you.
Absolutely. Absolutely. That's very true. One final question before we go on to some of the questions that from the audience today. I just want to pick up on this, because you said, and it was about when we were talking about mental health and finances, and you said that, you know, the most important thing is that the entrepreneur also pays themselves as well as their employees. And I've seen so many who won't do that.
Yeah.
And worse than that, you know, they're carrying the burdens, and maybe it's an issue. They'll employ people, but they don't actually then trust those people to do what they're doing. So they're working all the hours God sends on weekends, and their employees are going, I don't know what I'm supposed to be doing.
Yeah.
Have you come across that in your experiences?
All the time. It's very hard. So when it's your baby and it's your business, and no one does things quite like you, because and I'm going to newsflash, no one's going to care like you do. No matter how engaged a member of staff you have, they're not you, and it's not their business. And you just have to be okay with that. You will get super engaged people who work with you, get people who really buy into it, but even those people may one day decide to move on, and that's okay, because you did too, and you will too. So you have to be okay with that, and it can feel very personal and unpleasant. No one's going to care just like you do, because at the end of the day, they get a paycheck and they go home and they maybe switch their computer off at 4 on a Friday, and they might not think about work until Monday morning, whereas you are thinking about work all night, or Saturday night. You're out with friends and you're answering a quick email, or you've just had a quick idea, so you're just going to pop a little note in your phone about it. It doesn't stop when you're the entrepreneur. You have to be remunerated for that. If your business can't pay you, it doesn't work as a business. You wouldn't go and work for free for anybody else and expect them to hold that level of responsibility and stress. It's ridiculous. You can't work for free. So again, like writing a goal down or like putting it up on a board or whatever else, you've got to make it real. Pay yourself first before everybody else. Have a different pay date to the rest of the team. Pay yourself on the first of the month, they get paid on the 30th or whatever, but pay yourself first. You'll find you will make the money to do it because something in your mindset shifts and you just make it happen. If you're always bottom of the list, you'll always find something to pay ahead of you. So like, oh, I know I haven't taken any right this month, but this thing looks really exciting. Or maybe I'll just do this little bit of advertising and I can let it slide for a month. Or I'll take half the salary. No, none of that. Don't want to hear it. Pay yourself a proper, I mean, look, it's not necessarily going to be commercial rate. We all know that, but pay yourself to cover your personal budget, household expenses, and a bit of fun as well. Like you've got to have a personal life. Pay yourself first and the rest will follow. Otherwise, it's a really hard habit to break because you'll never have enough money. We always spend what we have. We're all sort of kind of, I think it's built into us as humans. We always kind of, there's no one, there are very few people who get to the end of the month going, oh, I've got loads of money left. It's not a thing. I've got all this money left over I've not spent. Lucky me. It doesn't happen. So yeah, pay yourself first. Otherwise, you're going to get, what's your compensation for that additional stress that you're holding? Also, you need more time off than other people. You should be taking more holidays in your team or more days off your team. And I know that seems like a really hard thing to bargain with in your head because you're the founder. You should be working hard. You need more time to recuperate because you're holding that stress. You have to look after yourself. And if you don't do it, your body's going to do it for you and you will crash and you'll be out for a month.
That's very good advice. Probably best advice I've heard in the last few weeks, to be honest with you.
And it's really hard to stick to. Even I struggle with it, and I have to check myself.
I know.
Yeah.
It's like I'm not gonna open my laptop this weekend, and
yeah, and then it happens. But you can use all kinds of fun technology, so you can get little lock boxes on timers and things to do that for you. So if you have very little willpower, you can buy fun bits of tech that you can lock your things in with a time on it and it won't open until that time. So you can self-manage that if you are someone who doesn't have any willpower.
I think it's easy just to put a label on top of your laptop saying this is Pandora's laptop, do not open it.
Stop being an idiot, like go and enjoy yourself. Yeah, but it's much easier said than done, but it's about building those habits, I think, and setting those boundaries. Someone says to you, would you mind just doing this quickly at the weekend? No, I'll do it on Monday.
And you know what I've learned since I've gone from being a full-time academic into doing other stuff, that importance of saying no is probably the biggest lesson I've learned.
Yeah.
Because I always used to say, yeah, of course I'll do this. And then I'd be going, how come I'm not in the pub and everybody else is? Well, I'm doing something for free for somebody who's asked me to do a favor for them,
Yeah.
So now it's no first and then maybe.
And entrepreneurs by their nature love doing stuff. So we love being engaged and we love people asking us to do things and we love saying yes things, but you can't do everything. You just have to say no to stuff sometimes. And sometimes you might get a bit of FOMO, but there'll be another opportunity.
Always. Okay, I'm going to go over to some of the questions we've had.
Great.
So the first one is, do you think there are certain places startups waste money that they could avoid? Or how do startups waste money? How do they avoid doing that?
Bloody branded merch.
I'm trying to look whether you've got any behind you, but you haven't.
One book. We have very little branded merch. Branded merchandise. I see people, they've just started a company and they come out and they look the episode of Friends where Joey dresses himself top to toe in Porsche gear because he hasn't got a Porsche, he wants to look like they're like that. And I'm like, what are you doing? You've spent £200 on this. Like, why? And you're bound to rebrand before you use all this stuff up. And the thing is, though, it's really, I love a bit of branded merchandise. It's great, but I've got Sophie going, it doesn't do anything. We can't have it. And if you're doing a trade show or exhibition or something, maybe you need a couple of t-shirts or something, but like getting all that stuff and sending it out to people, it's a huge waste of money and it's so easy. you can literally waste hundreds and hundreds and thousands of pounds on this stuff, and you'll rebrand in a couple of years because you're new and your brand evolves and what you want it to evolve, and then you've got all this redundant crap that you don't need. Yeah, stop doing that.
And landfill sites certainly don't need any more redundant crap.
Our world does not need more redundant coffee cups from old brands.
I've actually still got a couple of coffee cups from companies 15 years ago that are still not, but they're solid ones.
Well, at least they're getting used though. Reduce, reuse, recycle.
Good. The second one is from obviously somebody who's got their own business. They're saying the business is struggling financially, and they're thinking of starting a second job. How would that affect their business finances, tax, etc.?
So if you're having, depending on your structure, so if you're self-employed and you have a job, that'll all just get declared on your tax return. If your business, in that scenario, if you're making a loss on your business, you can actually offset a loss against your personal income tax bill, so you'll get some kind of benefit from that. If you're a limited company, you might just want to make sure that you're not taking any official salary out of that, so that your tax code is not being used up in there, and it can be used up in your job. And then any money you are taking out of the limited company would just be, if it was available, just tax on the kind of dividend rate. But ultimately, it's just about, again, looking at it. It's not one thing; it's the whole picture of how it's operating. Yeah, and just checking that you're doing it in the most sensible way for you. So if your business is loss making, and you're a sole trader, it might work out quite nicely. If it's a limited company, at least you're not going to be incurring any personal tax for that for now.
And also, as what you said before, maybe it's time to go back and look potentially at the what are the things that drive the business.
Yeah,
time to do that as well.
Yeah, absolutely. And, it's fine to, people have got side hustles and we do what we've got to do sometimes, and you've got to be scrappy and you've got to take that work on. But I'm guessing you don't want to do that forever. So maybe give yourself a time limit as well and go, I'm going to do this for 1 year whilst I understand what my business is doing. And in that time, I'm going to drive it. And I'd recommend using that income that you're earning from your job. Don't go putting that into the company. That's your payment. That's you. Like we just talked about that. Make sure you get paid with that, and then the company work on that separately.
So here's a dilemma which I'm sure many have come across. So how should an entrepreneur handle an employee who wants a pay rise, but the companies are not in the position to provide one, without that employee thinking that the entrepreneur doesn't care?
Yeah.
How do you manage that dilemma?
Or that they're working for a company that can't afford it. It's a really hard thing balancing honesty, transparency, and vulnerability with your staff. And it depends how big a team you are. I'd always recommend, sometimes it's not about the actual money, but it's about them understanding their pathway. So maybe they want a pay rise, and everyone's being hit with more costs at the moment, energy bills, interest rates. We hit from all angles, and most pay isn't keeping pace with inflation, so everyone's feeling that pinch. Make a pathway clear. So say, I understand why you want more money, so that the way you get to this next thing is either through this qualification or this experience, or okay, but could your role perhaps extend into more commercial areas that's driving revenue for the business? Seeing how they fit into the big picture and how their actions will help the company grow might make a pathway very clear for them, which allows them to go, well, if I want to earn more money, then I need to do X, Y, Z, which means I've got more value, which means I will get to that place. But I think transparency of pathway is something, and it's something that in kind of commercial departments and sales departments is very clear. They typically have they have quite a low basic income, but they make their money because they're selling, they've got commissions, and it's very clear to them how it is they get to earn more money. They get do more of this activity, they earn more money, become more successful, earn more money. I think where you've got they've not said what the role is, but what other roles, whether it's support, marketing, other things, they are obviously essential to the business, but sometimes it's not clear how that fits into the big picture. Making that clear, explain the pathway, I think will probably help in that conversation. And sometimes being quite honest, going, look, we're a startup company. We've got challenges, but we really want to provide a future. Ask for some patience. Here's the pathway. Hopefully you can get on board with the vision. And yeah, that's a conversation that is worthwhile having as well.
And also, obviously, now increasingly companies are looking to provide employee share schemes as well for those really vital particularly at the early stages.
Yeah, well, interestingly, I was reading a book about Amazon, and they have a structure where nobody in Amazon earns, I mean, love it or hate it, whatever, but they've got a very interesting structure, whereas none of the executives in Amazon earn more than $160,000 a year, and all of their bonuses and pay rises are put into vested shares because they want to encourage long-term thinking. So that's not necessarily the right path for everybody, but I thought it was interesting that that's how they handle that question.
Good. I've got one here. I'm sure I can tell you what the answer is already. So there's somebody looking for an online accountant or software to help save time, allow them to focus on other things, but struggling to hand over the responsibility. Do you know the best way to find the right one for me?
Come to Mazuma. Come to us. Come and have at least have a chat. At least have a chat with us. Look, other providers are available. I'm obviously going to promote what we do, but yeah, at least come and have a chat with us, and you've got a benchmark then, and you know what's available.
We've talked about salary, and particularly for startups, and how important it is.
Yeah.
How do you set that as a founder at the beginning of a business?
Very tricky. Job number one is, what does your life cost? So what does your mortgage, rent, bills, car, what does that cost you? I mean, we're just breaking even there, covering expenses. That's the minimum it's going to give you. Then you want to add on a bit of fun money. So add on whatever for you want to do on a holiday, you want to do the weekends away, you want to have X number of meals out a week, add all those on. And then you'll get to a number which looks like, right, you've got your what I call personal survival, which is just basics but no fun. And then actual life, add that on. That's your starting point. And then you start looking at, if I was working for somebody else in this role, what would I be paid? And start aspiring to take yourself in those steps to getting that salary, or at least taking that money out of your company, in whatever way, tax structure you want to do. Get there. But yeah, start off with your personal survival budget plus a bit for actually having a life, and then work up to where you want to be. Again, it's about having intent and setting goals. If you only ever pay yourself £20,000 a year and you've done that for the last 7 years, you've probably not been great at setting that intent of what's next. And it is going to affect things like your ability to get mortgages and borrowing if you're not either making profit or paying yourself out of the company in some way. That is going to affect things for the future. So you do have to think about it in the wider aspect as well.
Question about, it's a legal question, and it's to do with, if companies are a legal entity, how does personal credit affect business credit?
They can be quite linked now. So pre-credit crunch, we had much more separation between limited companies and individuals. But post-credit crunch, unfortunately, you'll find that if you have any borrowing in that company, you're likely to have to give a personal guarantee, or if you have a bank overdraft, you're likely to have to personally guarantee that as a director. And in those cases, they might do a personal credit search on you to make sure, or they'll at least ask for an asset register to see what you have to make sure you can service that debt. So they can be linked. It's not to say there aren't solutions to it if you don't have great personal credit. Everyone has an opportunity to get out of that, but they are more linked than they used to be in the days before 2008.
And we talked about credit crunch. We've also got the energy crunch. Is it worth claiming back expenses for energy bills when you're working at home?
Yeah, there's certain formulas you can use. And when we say claiming back, obviously you're only really claiming them back from yourself. So you're reducing your taxable profits, which is saving you a bit of cash. But yeah, there's no fixed way of doing it. There are like set rates you can use from HMRC. But the main rule is that it has to be logical and consistent in the way you do it. So there are kind of formulas you can use to make sure that what you're using at home, instead of saying an office, use of home as an office, is put through your accounts to account for the fact that you are essentially spending money to run your business from home.
And another question is about going from basically a side hustle into while working a full-time job, into starting a business. When's the right time to do it?
About 6 months before you actually do it is usually my answer to that one. Everyone waits too long. So this is very personal, and obviously your personal financial situation is going to have an impact on that. Also, the way that you deal with risk is going to impact that. If you're sat on tens of thousands of pounds of savings, it might be easier for you to want to quit your job than someone else who's living a bit more hand to mouth, because you've got a safety net there. A little bit of a safety net is good. It's not always the best thing because you tend to lose intention, I think. I think a lot of entrepreneurs perform best when their back's a little bit against the wall. That's when you become most creative. That's when you become most resourceful. So actually, when we started Mazuma, I quit my job basically immediately, and I told my business partner Sophie, and she's like, "Oh no, all right then, I guess we're doing this." And I'm like, "Yes, we are." And it was having the belief in yourself that you do have the skills and resourcefulness to do this. If you're leaning on that crutch of income from somewhere else, you're probably never going to fully commit to your side hustle and turning it into a full thing. So give yourself a cut-off date and do it by then. Don't be like, oh, when I get to this or when I do that, I'll do it, because that when will never happen. Just pick a date and stick to it. Hand your notice in, and then you're done. Like 3 months, whatever. Right, I'm leaving in 3 months, and then you've got to you've got to stick to it.
And just on that is when I do start, and this is something I used to do a whole lecture on the different types of business, from sole trader, etc. Right? So how would you start your business? Would you start off as a sole trader? Would you incorporate from day one? Which would be the best way, in your opinion?
There are factors to consider. So if you're in a very high risk business with a lot of potential personal liability or huge costs in terms of maybe startup equipment or things like that, probably maybe a limited company is a better way to go. However, most businesses start off as small entities. We're not talking Silicon Valley here. We're talking kind of the normal people. I'd start as a sole trader, mainly because, especially, you may well have had it's easier. First of all, there's not so much compliance, there's not so much legislation to deal with. The tax feels more familiar because it's similar to how the rates are similar to how you're paid in a job. It's much easier, and there's much less compliance work to do with that to get your head around. It's a much easier start. You can kind of soft launch yourself into it, then get an accountant, and they can monitor the situation, and they'll tell you when it's a good time to become a limited company. If you go in too soon, you have real problems drawing money out of that company without incurring huge tax bills. A sole trader, you can take capital in, drawings out without any tax implications to yourself personally. It's all based on your profits. Whereas with a limited company, because it's a separate legal entity, if you're taking money out of that company, there's a tax implication. So aside from extenuating circumstances, huge investment, big cost, whatever, that kind of thing, normal people, I'd start as a sole trader, get an accountant immediately. If they tell you straight away you need to switch, they can help you through that process and do it for you. It's the most common question we get asked. Sole trader versus limited company.
I've got a question, Joanne, and I'm sure we can answer it here, but it's about the financial support out there for startups, such as government grants. I think there are things out there, but I think you've just got to go looking for them. You wouldn't have them, would you, to hand?
No. And typically they don't tend to land on your doorstep either. You probably have to go and spend some time looking for what works for you, and they change all the time. So always have one eye on the ball. I couldn't list ones off, and there's different ones for different industries. Certainly for big projects, Innovate, I know, is out there. And there are local, there may be local ones in your area for development grants, or certain micro grants for reinvigorating things. There's all kinds of stuff. Check your local council area and check the wider UK area as well. And it's always worth putting an application in for a grant.
Okay. Last question. So I've asked this of everybody, so it'd be interesting what you say. What's the one thing you'd do differently if you could do it all over again?
Oh, good question. I'd let go of things sooner. I'd hire staff sooner, and I'd let go of things sooner. I think that's the one thing that even with two of us starting the business together, we didn't take on help until we were drowning. And at that point, then it's very hard. Whilst you're drowning, it's very hard to teach someone to swim next to you, because you don't have the space for it and you're tired. So that, and then learning the lesson. I've gone for 2 now, but learning the lesson about paying ourselves first. The first couple of years we didn't do it, and it was really hard, and you wonder why you bothered doing it. Once we've implemented that, your mindset completely shifts, and it's just a game changer. So yeah, I'll give you 2 things. That's cheating, but anyway, that's my answer.
Well, Lucy Cohen, thank you so much yet again. That was fantastic.
You're very welcome.
Who thought of finance could be so interesting?
It's fascinating. It is sexy. I told you it was great.
Okay, well, thanks Lucy, and we'll see everybody else this time.